Good afternoon, ladies and gentlemen, and welcome to Sagar Cement's Q3 and 9-month FY24 earnings conference call. Please note that this conference call is now being recorded. Uh, so, we have with us today from the management Mr. S. Srikanth Reddy, Joint Managing Director, Mr. K. Prasad, Chief Financial Officer, Mr. Rajesh Singh, Chief Marketing Officer, and Mr. Raja Reddy, Company Secretary. We will begin the conference call with opening remarks from the management, following with which we will open the floor for interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussion may be forward-looking in nature, and a note to that effect was stated in the con call invite sent to you earlier. We trust you have had a chance to go through the result communication and documents. I would now like to hand over the call to Mr. Reddy for his opening remarks. Over to you, sir.
Yeah, thank you, Manish. Good morning, everyone, and welcome to Sagar Cement's earnings call for the quarter and the 9 months ending December 31st, 2023. Let me begin the discussions with a brief overview of the market in terms of the demand and pricing, post which I will move on to Sagar specific developments. Overall, we have observed easing of demand, primarily attributed to the state elections and also due to the festive season. Despite benign demand, realizations remain relatively stable for us. The overall demand trend, however, remains resilient, buoyed by ongoing housing and infrastructure activities. Input prices have generally held steady, with the advantage of lower power costs being offset by higher freight rates. The quarter saw increased profitability thanks to a combination of lower raw material prices and consistent realizations. Let me now move on to our quarterly performance. We have had a good quarterly performance, both operationally and financially. Pickup in volumes coupled with steady realizations resulted in healthy top line and profitability growth. Volumes during the quarter stood at 1.4 million ton, higher by almost 14% over the quarter Q2. We believe we can achieve overall volumes of around 5.6 million ton for FY24. Shifting focus to profitability, EBITDA per ton has seen a meaningful improvement, largely on expected lines, as I have indicated in our previous call. We expect the trend to continue, supported in part by higher utilization levels of recently acquired units and strategic initiatives aimed at promoting the use of green power, alternate fuels, as well as deployment of electric trucks and wheel loaders. EBITDA for the quarter stood at rupees 87 crore, as against rupees 48 crore generated during Q3FY23, higher by 83%, and rupees 60 crores garnered during the sequential previous quarter, higher by almost 45%. EBITDA margins for the current period stood at 13%, as against around 8% reported during the corresponding period last year, and around 10% generated during the sequential previous quarter. After considering the interest outgo and the depreciation expenses, loss for the quarter stood at rupees 10 crore for the quarter, as against a loss of rupees 24 crore during Q3 FY23. In terms of key operational activities, as mentioned earlier, our efforts are directed towards improving the overall efficiencies and ramping up the utilization levels of our recently acquired units. The average fuel cost stood at rupees 1700 per ton, as against rupees 1858 per ton reported during Q3 FY23. Freight cost for the quarter stood at rupees 864 per ton, as against rupees 795 per ton during Q3 FY23. From an operational point of view, Mattampally plant operated at 52% utilization, while Gudipadu, Bayavaram, Jeerabad, Jajpur and Andra cements operated at 97, 67, 69, 28 and 37% respectively during the quarter. As far as the key balance sheet items are concerned, the gross debt as on 31st December 2023 stood at rupees 1557 crore, out of which 1257 crores as a long-term debt. The remaining constitutes the working capital. The net worth of the company on a consolidated basis as on 31st December 2023 stood at rupees 1618 crores. Debt equity ratio stands at 0.78:1. Cash and bank balances were at rupees 157 crore as on 31st December 2023. Another noteworthy development is that Board of Andra Cements has approved proposal to implement a new six-stage preheater for cost optimization and to enhance the clinker and grinding facilities at its Dachepalli unit. The estimated project cost will be around 470 crore. The entire project is going to be commissioned by end of financial year FY25-26. In summary, we believe our diversified regional presence, improving product mix, and consistent focus towards lowering costs and improved operational efficiencies position us well to create value for our stakeholders. That concludes my opening remarks. We would now be glad to take any questions that you may have. Thank you.
Thank you, sir. We will now begin with the question and answer session. A reminder to all participants, you can ask your question by raise of hand in the participant tab of the Zoom platform. The first question is from Shravan Shah. Please go ahead, Shravan.
Hi, thank you. Sir, first, coming on the volume front, so in the last phone call, we were confident that we can do a 6.2 million ton for this year. And now we have reduced the guidance for the volume for this year to 5.6 million ton. So just wanted to understand, despite we were in the middle of the last quarter, when we did the call and we were confident and what has happened. And similarly now, how confident are we for this even 5.6 million ton? And also for the next year FY25, previously we said 7.5 million ton volume. So if you can help me with the revised number, and also if possible, how much will be from the Andra cement?
Yeah, thank you, Mr. Shevan. Yeah, as indicated, there is a downward revision from 6.2 to 5.6. The reason is obvious that the post-election scenario, both at Madhya Pradesh and Telangana, we expected some amount of ramp up to happen, which looks to be challenging at this point of time. I think the national elections and 3 months post that scenario, till such time we believe that the demand is more going to be on a flattish kind of a trend rather than on an aggressive kind of a thing. So that's one of the reasons why we had to do the downward revision. Now looking at the confidence of doing those numbers, yeah, we believe that with the downward revision, we actually removed some of the government demand that was coming by. So we have reduced it from 6.2 to 5.6. This looks to be a lot more realistic from our end to be reasonably close to the number what we are committing at this point of time, Mr. Shah. Now going to the next year, we believe 7 million is a possibility for the full year next year. This having factored that Q1 probably would also be, the demand probably would be more on a sidelines owing to the general election and more specifically elections in Andhra. So our past experience is that 3 months before and 3 months after election, the demand tends to be a lot more slower than what it normally is. Given that context, we made the downward revision. Andhra specifically, the target for the next year is to do anywhere between 900 to a million ton for the coming year. Hope I addressed all the questions, Mr. Shevan.
Yeah, Andhra, you said 0.9 million ton.
Yeah, 0.9 to 1 million ton, Mr. Shevan, for the coming year.
Okay, got it. Second, in terms of the profitability front, so there also we were looking at 400 odd crore kind of a EBITDA.
Yeah, now I think we should since there is a downward revision in the volume. Yeah, I think the indicative potential EBITDA that we feel that we should be able to generate is around 310 crores.
Okay, 310 odd crore. So the fourth quarter we can look at 135 crore kind of a EBITDA.
Yes, sir.
Okay, got it. But there to achieve that, what kind of a price increase? So I believe still the prices would be lower than
No,
the.
what we have factored is a flattish trend in our case for the realization. We are expecting 150 rupees kind of a saving both on account of fuel as well as increased volumes would give a better spread in terms of the overall contribution. So 150 rupees per ton is incremental cost saving, that we hope to achieve. So from the current 610 odd rupees EBITDA per ton from the current quarter, we are expecting it to stabilize somewhere around 750 rupees per ton for the coming quarter, Mr. Shah.
Okay, and then the similar run rate can be maintained for the next year.
Yeah, let us handle one at a time. So we are reasonably sure of the volume. I think on the pricing, the outlook, we would be happy to come back to you as we cross the Q4 and enter into the next year scenario.
Okay, and on the capex front, how much we have done, and what's the number for this year and the next year, considering the new expansion that
See, I
now
think
we are.
we have done all the capex that is required for the current year, which was more on the operational side, which is the maintenance capex. For the coming year, as far as Andra is concerned, I think for the next full year, our target is to do around 150 odd crores. Bulk of it is back-ended, as you know. The announcement is for constructing a new 6-stage preheater. So bulk of the time that gets consumed is in the civil activity. So for the next coming year, it's mostly to do with the construction of the civil and partly to do with some advances to the equipment. So we don't expect it to cross more than 100 to 125 crores for the coming year. As far as Andra's new capex announcement is concerned, the rest is more to do with the operational maintenance capex, which we have indicated. It is close to around 30 odd crores for the next year, full year for at all the other plants. We are yet to start the other small brownfield additions that we have announced. We have time, as indicated by FY25 end. Yeah, we should do a 500,000 ton expansion at Jeerabad and a 250,000 expansion in Gudipadu. Those are not large capex kind of a thing. Those are with very limited kind of a capex, but they are time consuming because we are going to the clearance at Jeerabad for enhancing it from current 1 million ton. We need to enhance the EC clearance to 1.5 million. So till that happens, I don't think we would be doing any capex. We expect that to come anywhere between 9 to 12 months. Post that only our capex would start, and we would be happy to come back to you as and when the timelines get crystallized on the Jeerabad brownfield expansion.
And broadly on the date front, so currently 1557 odd crores. So in terms of the will this further increase?
No, I see. I think at 1400 to 1450 net debt position, I think our position is going to remain same because we are committed to raise equity at Andra. That and whatever is the payout at a group level, that is the balance that we are going to do. So we would not exceed the net debt level of around 1400 to 1450.
And lastly, the Vizag land sale. So anything is happening? So now
I think we did announce. I think we have made a good progress. I think we have another 12 to 15 months. I think the timeline still remains the same. So first phase is more or less completed, sir. So the mutation and the associated things are all done. So we are entering into the next phase. So we are hopeful that over next 12 to 15 months we should be in a situation to liquidate the monetize the land at Vizag.
So by end of FY25, we should be able to monetize and get the cash, and that should support us.
Yes, sir. I think those are the timelines which we are hoping. It looks that there is a good possibility that we should stick to those timelines.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from Rajat Setia. Please go ahead.
Hi, thanks for the opportunity. I just wanted to check about the pledge shareholding. It's on the BSE, it shows that 75% of our holding is pledged, like promoters holding.
No, Mr. Rajat, I think it is more to do with the nomenclature. Yeah, if you have looked at it, there is a SHA for us. That is the shareholders agreement with PI and all. So it's non-disposal agreement also reflects as a pledge, but it's not a pledge. It's actually non-disposal of promoter shares, sir. It's not pledge.
And how much is really pledge, or there is nil pledge?
No, there is a very, very marginal, the extended family of the promoter, but that's very, very negligible.
Okay, understood.
Majorly, it is only the non-disposal undertaking which is reflecting as pledge. There is effectively on the core promoters, there is no pledge at all.
Okay, understood. The second question is about the cost of debt. On 1600 or so gross debt level, we are incurring 50 crores in interest payment on an quarterly basis. So what's our cost of debt and what is
So
the
it is
breakup
around
of the interest
10%,
cost?
sir. I think it is at 10%. So there is some amount of realignment. The average cost of debt is at around 10%, slightly lower than 10, but I would assume it is close to 10, not more.
So what are the other components of the finance cost that we are reporting in quarterly statements, which came at 49 crores this quarter?
Yeah, this time the debt itself swelled, sir. So your numbers looked higher, but cost of debt is at 10%.
Okay. Because if you go by 10%, ideally it should be 40 crores on
Yes,
a
sir. I
quarterly
think
basis.
it will get aligned to that number, sir. Sir,
Starting
there is
next
a
quarter?
working capital renewal and all. So the charge creations and all would have actually added up, sir. But it effectively is interest cost would not exceed the number what we discussed. Sir.
Okay, so are you saying there will be reported finance cost of 42 crores starting next quarter, or
Yes, sir. I think
how
it
is
should be close to around 45 crores on a higher end. That's what.
it? Okay, understood. Understood. And sir, on the realization side, I think we reported one of the highest realization in the last many quarters. So what really led to that? I mean, is this seasonal
No,
or
I think the
sustainable?
October pricing at the market, there was a steep increase, sir. And we have always been extremely cautious that we don't chase low cost orders, be it trade or non-trade. We don't mind compromising on the utilization, but we would never do it on the realization front. So vis-a-vis to some of the market players, our realization trended at a lower pace downward rather than I think October there was a steep increase. November there was a little drop for us, and December, of course, we more or less aligned with the market. So that probably pitched our realization slightly higher than most of the other market players.
Okay. So some correction has already happened, basically.
No, correction was a constant. It's a marketplace. From October to November to December, the trending was downward, but in our case, the drop is not very significant. So is the case even in the current month, sir. So though the market, see, it's a mix of various things. It again depends on once the some of the subsidiaries start operating, they are very close to the market, sir. So the realizations for us would also become higher. So these are all the mix. But in all, our relations have been reasonably healthy, purely because we did not chase low cost, some of the low cost orders that were in the market. Realizing that those things would not anyway increase your volume substantially. So idea was not to lose on whatever little margin that is available.
Sure, sure. Okay, sir. I'll get back in the queue. Thank you so much.
Thank you, Mr. Reddy.
Thank you. The next question is from Keshav Lahoti. Please go ahead.
Hi, good afternoon. So just want to understand one thing on Andra land monetization side, as it's a a big land parcel. So what are the initial trend you're getting? Will it be sold to a single buyer, or you have to possibly divide the land? And secondly, when you will sell the land, do you need to do any ground leveling or some other sort of work to make it ready for sale? And lastly, there are the old grinding plant installed at Andra. So whether have you sold it off, or how is the progress going on that side?
Yeah, Mr. Keshav, so the land, our intention is to sell the land as is where is. So the question of leveling and all doesn't arise. We are good 6 months away because we are awaiting for one more clearance. We put the overall process in three parts. The first part was to get the entire land parcel mutated because there is digitalization of land records in Andhra. So that part is more or less 95% done. So we are entering into the next phase where we've already returned to Andhra government on two counts. One, there was a permission that was a requirement for us seeking for sale of land because this land was assumed alienated and transferred from Andhra government to Andhra Cement in mid to late 70s. So there was an obligation that we have to get a government permission if we have to put it to use for any other purpose other than the industry there. So we've already initiated that process. We hope over next 5 to 6 months we should have got the permission for the sale. At the same time, it also needs conversion, the usage conversion, sir. Currently, it is for industrial use. So we did apply for a mixed usage. So we believe if we do these two issues, there is a reasonably better value that we could attribute to the company. We are not into the real estate development, so obviously we are looking at all the options that are available to maximize the realization. Do we have to sell in bits and pieces, or do we have to sell a large parcel? Yeah, we did assign the consultancy advice to JLL. It's work in progress, so we'll be happy to come back to you as and when we would have got the advisory from JLL as to what would be the best route for us to maximize the value from the sale. That part, I think we are good another 5 months away, 5 to 6 months away. So we'll be happy to revert back as soon as we reach to that milestone. Now coming back to the existing grinding, the clinker, this clinker grinding station there, yeah, we did sell. So the mills, there are two mills and there is a dryer. All these things have been sold. In fact, 50% of the equipment have also been lifted by the purchaser. We are leveling it out, the civil structures. That is the part which we have undertaken. I think over next 5 months, the land should have been without any industrial asset on sitting on top.
Understood. What sort of realization we can expect from the sale of all these grinding units and dryers?
See, I think the attributed value is close to around 18.5 to 20 crores, Mr. Kesh.
Understood. Got it. And right now, how are the cement prices versus Q3? Like if the current cement prices stays as it is, so what sort of drop in realization we should expect in Q4, Q1, Q?
See, the current trend, though the market was talking of a price increase, sir, we are yet to realize. So in some pockets, it's more or less flat all the way from November to now. In some places, we have seen a 5 rupees per bag kind of a dilution. But this is very, very specific to southern pockets because middle of month there is a Pongal and Sankranti festival. During those times, the demand is literally close to nil. So that typically tends to put some pressure on the pricing as people try to squeeze whatever little that is available. But we hope that the prices are more or less very similar at starting of the month to end of the month. From the exit of December, we believe that it should more or less be flat.
Okay, got it. What I've understood, like FY25 would be a very more like a maintenance capex kind of a thing, and the major Andra capex and the Sadhguru and other thing will flow in FY26. What sort of capex you are looking in FY26?
See, I think we did announce a 470 crore capex at Andhra. Only 30% of that we expect it to happen in the coming year, sir. Rest everything to be spread. Around another 50% should happen in the coming year. The small residual portion probably would flow into the next year later. But whereas the small brownfield capex that is required both at Jeerabad as well as Gudipadu should come in FY26. That should not be more than 50 odd crores. And probably another 25 crores should flow through into the year later.
Okay, okay. Understood. So last question from my side, the trade share for this quarter.
We are at 55.5 kind of a number, sir, for the quarter that went by, right?
Yeah, perfect.
Yeah, we are at around 55%.
Okay, thank you. That's it.
Thank you.
Thank you. The next question is from Parth Bhavsar. Please go ahead.
Yeah, hi sir. So thank you for the opportunity. Sir, earlier you mentioned that demand usually slows down near our national elections, and even it slowed down during your state elections. Even we've discovered, like, we've according to our research, 3 out of 5 elections demand has usually slowed down post elections. So considering that demand is expected to slow down a little in FY25, and at least 30 MT is being added by in terms of capacity is being added. So what sort of EBITDA per ton you're building in, and how much like are you building price growth? So is there any EBITDA per ton improvement that you're building, like which would be on the back of price growth? Because I feel
I
there would
think
be a
for the
lot of yeah.
coming year, we are reasonably sure of the volume, Mr. Park, but we are yet to pencil in potential kind of margin analysis. I think we should be doing it close to first week or second week of March. I think with the current year financial year results, we would be in a much better shape to really talk of the margins for the coming year. Our belief is that see, national elections is one part, but the state elections, because state government typically tends to influence more cement demand in the regions that we operate. Historically, it is 3 months before and 3 months post election tends to be slower. So that has been factored in. So we believe that the next year our own numbers are primarily coming from the ramp up that we expect from Jajpur as well as Andra rather than existing assets. So there we are not trying to factor any incremental volumes for the assets that have been operational, purely because there are some new capacities that are likely to get installed in the same region, namely Sri of Guntur and my home of Melacheru, and probably to a certain extent some additional ramp ups from Ramco Kalimkunda. So whatever little demand that is likely to grow, we are adjusting it to these ramp ups.
Okay.
Internally, our only take is that we are likely to do 7 million for the coming year from around 5.6 million. That majorly would come both from Andhra as well as Jajpur. That's what we have penciled in. Margin, we would revert back to you probably during the full year
Okay.
results somewhere around middle of Q1.
So fair enough. Sir, on the industry, do you think that just on the industry, that do you think that the incremental capacity addition would be, the demand would able to, like equal it? That would the
It should, sir. I
incremental.
mean, what we have seen, we are penciling somewhere around 5 to 8% growth rate for the coming year. So, market should able to absorb whatever ramp up that is going to happen, with an assumption that the players would be rational in their flow of material into the market. I'm not expecting the material to rush in into the market. So that rush in sometimes would disturb 1 or 2 quarters, but at the end of the year, I think market should comfortably absorb 30-40% capacity utilization from any of those new commissionings that are likely to happen over the next few quarters.
Okay. Okay. And sir, on cost front, just wanted to understand what sort of inflation have we seen on slag and fly ash year on year or quarter, like whatever you can
Sir,
help
I
me
think
with.
I think slag as well as fly ash we have not seen, sir. Availability has always been a challenge, especially on fly ash. But from a price perspective, see, fly ash is not very sensitive to the product price. It's very sensitive to the transportation cost. So again, our take is that since it's gearing into the election, we believe that fuel prices may not significantly jump up. So that should more or less be very flattish trend as far as fly ash is concerned. Sometimes fly ash we may have to go very far to source. The neighborhood power plant is under shutdown because there is a lot of back of power that we have seen. We did struggle for some fly ash availability in some of the units that we operate. So we had to source fly ash from a slightly far off locations. But that's not inflationary. It's going far to get the material, sir. But we have not genuinely seen inflationary kind of a price increase on any of these cost of. It's more aligned with the transportation cost because the landed cost, the majority of it is only transportation cost, not the material cost.
Okay, sir, and we've been listening a lot about busy season surcharge being like higher year on year. So is that the reason why your fly ash and slag cost should be higher?
No,
But
we don't use railways for any of these incoming material as far as
okay,
fly ash and slag is concerned, sir. So
okay,
I don't think that can be attributed for that in our case. I don't know.
okay,
It could be specific to some units of some of the peers, but in our case, we don't use rail at all for either of these material.
Okay. Okay. Got it, sir. Thank you so much.
Thank
Those
you.
are my questions.
Thank you. The next question is from Hiten Boricha. Please go ahead.
Hello.
Please go ahead, Hiten.
Hello.
Yeah, good afternoon, Mr. Hit.
Good morning, sir. So you mentioned something about 150 dollar kind of savings from Q4. So
Not
just
dollar,
wanted
sir,
to
it is
understand
rupee.
from
Yeah, it is 150 rupees per ton. From the current quarter
Yeah.
to the next quarter is what we have indicated from a potential saving that is likely to happen for us.
So I just wanted a breakup of this saving from where this saving is going to
And
come.
100 would come from power and fuel, sir, because it's not just the fuel. Because the last quarter, our power and fuel cost impact was primarily on account of Andra cement, because there are frequent starts and stops, and we did consume very high cost imported coal. That itself is exhausted. So that potentially would save going forward for us. And another 50 rupees from an operational kind of a leverage, sir. Because from a 1.4 million, once we touch to 1.7, yeah, we believe that that should also help us have a 50 rupee saving. We went through last 3 quarters on a maintenance, aggressive maintenance at most of our units, sir. That is behind. So that should also help us save this 50 rupees incremental saving on the repairs and maintenance and consumables for us. So that is what we have indicated, that it should help us save incrementally 150 rupees per ton going forward for the coming Q4.
Understood. Understood. So what's the cost in kcal basis this quarter and last quarter?
On a per kcal, at a group level, you are looking at it, sir. I think we did include in our presentation. But let me. This is you asked our sourcing cost or aspired cost?
So I got the slide. I got the slide, sir.
Yeah, please. Thank you.
And so my next question is on the capex. I just missed the capex number you have given for 25 and 26. If you can please repeat it, sir.
Yeah, we just announced a 470 crore capex at Andra Cement, sir. It is to build a new 6-stage preheater with a pre-grinder for cement. But for the first year, that is the coming year, coming financial year, the only capex that we are going to spend is on the civil side. That's going to take almost 12 to 15 months for us to come up with the civil structure. Around 125 crores is what is the capex for the current year, and the balance would be spread over year and majorly into the next year, and to certain portion would be spread into a year later. So 125 crores would be for the coming year, and a maintenance capex of another 30 crores would be spent for the coming year for all the other units other than.
Understood, sir. Thank you so much.
Thank you, Mr. Hit.
Thank you. The next question is from Rajesh Kumar Ravi. Please go ahead.
Hi, sir. Am I audible?
Good afternoon, Mr. Rajesh. Yeah.
Good afternoon, sir. Good afternoon, sir. So this year you are purchasing clinker also from outside?
No, yeah, this quarter we did not. So yeah, we there is an inter group company transfers, Mr. Rajesh. Even that also is more or less completed, because when we were under maintenance in Mattampalli, so we had to source some amount of clinker from Andhra. That part is done. So I don't think we will be buying any external clinker.
No, because in the presentation, the plant-wise numbers that you share, there is a shortfall in the clinker and cement production numbers from versus total. So I thought, is there some external purchase at
No,
clinker
no, I
level?
don't think. No, I don't think we have done, except for some group level transfers. That to minor
Sure,
extent.
sure.
Vis-a-vis to the previous, I mean, a quarter before in Q2, of course, there was a lot of clinker purchase from Andhra. But coming
That is
quarter, it
okay.
is
On a group
relatively
level,
lower, and
yeah.
going forward, I don't think there is a requirement.
Okay, ठीक है, I'll get this sorted separately. And you mentioned that this quarter you're looking 100 rupees savings on the fuel cost, primarily because of the frequent starts and stop which happened at Andhra. So on a fuel cost
And
per se,
also,
your
and
number.
also we consumed expensive imported coal during that quarter because it was in the
Uh-huh.
inventory, so that got booked, Mr. Rajesh. So that is behind now.
So on a per kilocal, what sort of savings you're looking, sir, versus Q3
I think on a
on a
KCal basis, we
group
are not
level?
expecting on a KCal basis, we are not significantly expecting any savings for Q4, Mr. Rajesh. It's mostly to do with the optimization and the
And
high
the
cost inventory is consumed.
okay. So you're on a fuel mix optimization. The change is what will drive,
Yes, sir.
and
Yes, sir.
then the
And
extra
start
cost.
stops typically consume quite a bit of,
Correct.
the cold starts typically consume more. So that also is behind us.
Okay. And total capex you said for FY25 would be 150 odd crore,
Yes, sir.
including
Around 150,
125.
155, 125 from Andhra, and the balance 30 odd crores for the operational capex across the other companies.
And this year total would be how much, sir? I missed that point. FY24, including maintenance, what is the capex outgo you're looking at?
Yeah, we did close to around 30 odd crores for the current year. Plus Andhra, plus
Okay. No, inclusive of everything inclusive.
Current quarter, we can say around.
yeah, in the current quarter, we are expecting 15.
Okay. Okay, sir. That's all from my end. I'll come back in queue. Thank you.
Thank you. The next question is from Keshav Lahoti. Please go ahead.
Just to follow up on trade share, what we have seen the earlier, trade share was more like 60 or upwards of that. That is now down to something like 55. So how you see the trend going forward? Will it be back to 60 kind of a number?
Yeah, I think it's more to do with the seasonality and also the government demand related, Mr. Keshav. Our usual listing is somewhere around trending around 60. I think we would realign ourselves close to 60 kind of.
Like my understanding was Q4 the government demand might has been weak, so ideally the trade should be higher.
So
Like
you asked for Q3, right? Not for
sorry, Q3.
yeah.
So I mean Q3 the demand from government might has been weak. Is it a fair understanding?
Q3 was relatively okay, sir. Relatively okay because Andhra still consumed some portion of cement, but we believe that in Q4 and going into Q1, most of it would go missing. So then naturally, then trade will start looking more. And the other issue also was during the election in Telangana. Uh, Not that government demand was very substantial, but the private activity was continuing. So we did take some additional exposure into the non-trade segment, especially the RMC business. So that also made this number slightly go more towards the non-trade. But I think on an average, we should trend close to 60%.
Okay, got it. The 7 million volume guidance, what you have given for FY25, is it possible to give breakup of Jajpur, Andhra, and Sadhguru, what you are building in?
Yeah, we will revert. We would keep this in mind, and we will be happy to share those numbers in the coming quarter, sir. Because it has to be cleared by the board for us, the annual plan. So we have the general guidance. We'll be happy to share that in the coming quarter. Mr. Kesh.
Understood. One last question from my side. Like Andhra unitary EBITDA was 270 for this quarter. So what sort of gain you can get, leaving operating leverage and other thing aside, just by the normalization of plant?
See, I think the normalization itself should kick in extra 600 rupees, so it should get aligned with Sagar, sir. Though cost is slightly higher, but the footprint area for Andhra sale is in a nearwood, I mean in the neighborhood. So that should more or less taper off. The freight should be lower, costs are higher, the other costs are higher. So net, I think it should get aligned with the Matapelli kind of a number, Mr. Keshav.
Got it, got it. And it should start from FY25 start, right?
Yes, sir. I think it should start from Q4, but I think it's fair to assume that from F1 onwards, Q1 onwards for FY25, more or less we see the gap narrowing down or more or less having a parity with
Okay. Thank you. That's it.
Thank you, Mr. Kesh.
Thank you. A reminder to all participants, in case you have a question, please indicate by raise of hands. So in the meanwhile, I have a couple of questions on DAR. So how is the ramp up which is happening at Sadhguru, both in terms of profitability and utilization levels?
Yeah, at Jeerabad, the capacity utilization for the last quarter was around 69%. The ramp up is reasonably there, but for the elections and the season, difficult rainy season that we have had, or else we should be trending close to around 85 to 90%. The profit margin for the quarter was close to around 969 rupees. We believe that we should be slightly higher because we had a lot of inventory on clinker also, so that did not help the margin. But I think the utilization levels at Jeerabad and the margin at Jeerabad is very healthy.
Perfect, sir. Thank you.
And coupled with that, the incentives of around 30 crores is due from Madhya Pradesh government. We expect to receive them the coming quarter itself. So the first installment of 30 crores is likely to be received in the coming quarter or in the current quarter.
Okay, sir. Got it. Thank you. The next question is from Rajat Setia. Please go ahead.
Hi, thanks for the opportunity once again. Sir, one historical numbers related question. So in FY23, our depreciation went up a lot, and compared to FY22, our current rate of depreciation is almost doubled. What is the reason for that?
Assets have gone up, sir. I mean, commissioning of new assets and Andra acquisition also added up to the depreciation.
So FY23 was largely non-Andra, but more assets, you are saying?
Yes, sir. Because the full commissioning of both Jajpur and Jeerabad happened during that timeline.
So, if we want to understand the kind of EBITDA that we can generate on a per ton basis, without considering any realization increase, so what are the levers and what kind of EBITDA
I think it's
per ton?
operational leverage, sir. I think it's only operational leverage because we are operating at close to 55%. I think another 20% increase in realization will automatically add up 100 rupees because you look at salary spread or more or less the repairs and maintenance and everything. If you have to spread it, that itself should add up 100 to 150 rupees incrementally.
So that 740, 750 number that you mentioned, is that the best
is without
EBITDA
any increase in
the...
realization? We did not pencil any incremental realization.
Right.
Yeah, we are only assuming the stable operations to come in. That should add up 150 rupees for us.
Okay, so post 750, it's the realization that will...
See, post 750, Andra ramp up should add up another 100 rupees on a straightforward because if you look at year to date utilization at Dachepalli is 22%. Last quarter is 37%. I think even if it aligns itself and touches 60%, that should significantly contribute to the margin.
Thank you. The next question is from Nitin Raheja. Please go ahead.
Yeah, hi. Thank you for the opportunity. So just want to know what is the current CK ratio and how do you see it going forward?
Yeah, I think we are close to around 1.3, sir. On a higher side, I mean, we have a long-term plan. We did commit that it will go up to 1.55, but I think it should take over a phased manner. For a short term, I think it should touch around 1.35 for within the next 2 years for eventually to reach close to around 1.55 by FY30. Okay, it's again to do with the ramp up in the other regions. Because most of the other regions, the blended cement ratio is much higher related to the current regions that we operate, sir.
Okay. And for gypsum and slag, or for slag and fly ash, do you all have any supply arrangements for the same? Like
Yes,
any?
sir. We have arrangement for Bayoram. We have an arrangement with RINL Vizag. For Jajpur, we have it with Tata Steel and Jindal. So we do have arrangement for that for slag. Yeah, fly ash also we have arrangement for most of the thermal power plants in the neighborhood of each of the unit.
All right, all right. And one last question is, how do you see the energy mix going ahead, like for the next 2 years? So, what kind of energy mix have you factored in?
See, when you look at energy, you're asking for petcoke and coal kind of a combination, right, Mr. Nitin?
Yes.
Yeah, we are very sensitive to the price. Our all units can consume petcoke, sir. So it's a very uh, we can use 100% petcoke to 100% domestic coal to 100% imported coal. We typically make the mix based on the cost of each of those particular things. So we try to trend more on as-fired coal to be very, very optimally kind of a costed. So I cannot give that number unless I know what kind of fuel is available at what price. But all our assets are capable of firing 100% petcoke to 100% imported to 100% domestic coal. So we make the mix based on the most optimal and most financially viable kind of an option, sir. So that subject has been very, very volatile. So it's not that we have fixed the fuel mix forever. We are blessed reasonably with a very good mix of limestone. So we have low grade, high grade, all type of limestones available, and dynamically we can make the adjustments. We historically have also made similar kind of an adjustment. When petcoke was very, very low cost, we ended up using it. When petcoke prices moved up, we switched to domestic coal. So we have always been making dynamically those adjustments to ensure that what we fire is the best from a cost point of view and also technical point of view.
All right. And so, sorry, one last question from my end is, are you making any additions in solar and WHRS currently?
Yeah, we do have close to around 1.5 megawatt of solar. Yeah, we have waste heat recovery system to almost tune of around 14.5 megawatt. We do have plans, but they are spaced out. By 2030, we hope to have green power almost a mix of 50% in our electrical energy mix. From current 25 to 30%, we intend to scale it up to 50% by FY30.
All right, all right. Thank you. That's it from my end. Thank you.
Thank you, Mr.
Thank you. The next question is from Sanjay Nandi. Please go ahead.
Thank you for the opportunity, sir. Hello.
Yeah, good afternoon, Mr. Sanjay.
Hello. Yeah, good noon, sir. Yeah, thank you for the opportunity, sir. Sir, just a clarification thing, like there have been some significant flood in the deep South India, like in Tamil Nadu and Chennai in this last quarter. So what kind of volume loss did happen for us in that time frame?
Sir, I think that is one of the reasons why we did mention that the demand overall tapered off quite significantly, because we do know that there is a monsoon in Tamil Nadu, but we have never seen such a heavy flooding in some of the deep south pockets. I mean, I think these are historically in probably more than a century, people have never seen such kind of flood impact. So that actually took off close to around 250,000 of volumes out of the current quarter. That's the reason why we scaled down, one because of election, as well as recovery of those markets probably is likely to take more than 3 to 6 months time.
Got it, sir. So that's from my side, sir. Wish you all the very best.
Thank you, sir.
Yeah.
Thank you. The next question is from Shawan Shah. Please go ahead.
Hi, sir. Sir, first, just wanted to understand in terms of the when we say 30 crore incentive that we are going to receive. So if I just look at and divide by the volume that, correct me if I'm wrong. So this, when we will be receiving in the fourth quarter, we will be booking in the revenue. So just if I divide by the volume that we will be having close to 1.7 odd million, it results to a kind of a significant 175 odd kind of a increase in the realization at the console level. So is it a fair understanding?
Yeah, Mr. Shavan, see, we did not pencil for EBITDA per ton calculation. it's again a state government issue, right? So that would be an incremental kind of a add up, sir. We have not factored that inflow in any of the statements that I've made so far. That is excluding that we expect 150 rupees per ton kind of a margin increase purely on account of ramp up at Andra and the other units. That is something which is like a bonus for us, Mr. Sharma.
Okay. And this 30 crore that we will be getting in this fourth quarter, and so going forward in FY25, how much we are looking at in terms of the incentive?
Sir, I think it is 30 crores installments spread over next 6 to 7 years, Mr. Shavan. It's an equal installment. We did indicate about this even in the earlier quarters. Yeah, it's a state incentive. It has nothing to do with the volumes, but of course it is subject to you utilizing a minimum of 70%. You should be getting close to 200 odd crores. Yeah, sorry, 150 odd crores spread over 6.5 years.
Okay, got it. Got understood. Second, I just wanted to understand what's the green share for this quarter, sir? Q3?
Green energy, electrical energy shares.
Yes, sir.
Yeah, it is roughly around 27%.
Okay, similar to last quarter also 27.
Yes, sir, because not significant change. We have not added anything new, so it is very stable. So even for the next quarter, we do expect things to be very similar.
Okay, and if you can help us in terms of the price increase, what has already happened in the third quarter? So in terms of the state level, if you can help us.
Nothing, sir, nothing. I mean, it is flat, as I mentioned, Mr. Shiva. Yeah, there is a small downward revision, but it's more or less flat with a negative bias.
No, sorry, sir. So for us, the realization increased 6.4% QQ. So how, in terms of the state level, how much it has come in the third quarter? What has
See, October month, it has been across South, Mr. Shavan. So it is not one state. Across the state, we actually got a huge increase. That more or less we sustained, barring small dilutions that we have seen in November and sequentially followed in December. But we will be happy to share that. If you could articulate the exact question, if you could send across message, we will be more than happy to share that, Mr. Shavan.
Okay. And you mentioned that for the fourth quarter, we will be doing a 50 crore capex or 15 crore capex?
15, sir, 15.
15. Okay. And till 9 months, we have done close to 145 odd crores.
Yeah, because that includes Andra's ramp up, Mr. Shavan. So we'll be happy to share the breakup of that.
No, I'm asking for the 9-month FY24.
Yeah, it is close to that number, but that majorly includes the ramp up that happened at Andra also, Mr.
Okay, got it. Thank you, sir.
Thank you, Mr. Shah.
Thank you. The next question is from Rajesh Kumar Ravi. Please go ahead.
Yeah. Thanks, Manish. Yeah. Sir, two questions. First, on the clinker CC ratio, if I look at 9 months, your cement to clinker number which you share, the CC ratio works out to be 1.24, 1.25, which is lower versus 1.35.
You should be very careful with the numbers because we have GGBS and all, Rajesh. I think we'll be very happy to share those numbers at a unit level. We'll be happy to share them. But in our numbers, you should be.
Okay, so I was just plainly looking at your clinker production group level and cement production group level.
No, but you'll have inventory, you'll have various things. So very happy to share.
Correct. So that is why I was looking at for the 9-month numbers to even out some of those impacts.
Yeah, we still sit on a huge inventory of clinker, Mr. Shavan.
Okay.
It is 1.32. It is 1.32.
And in Andhra, when you're doing your major expansions, there also this CC ratio can be comfortably.
Sir, it is all the same market, sir. The alignment is across at a group level.
Right.
Brand is same, so alignment is at a group level.
Okay. And second question pertains to when you mentioned this incentive which you will be receiving 30 crores. I think you also mentioned that you need to achieve 70% utilization.
Yeah, we already are above that. So we are already eligible, sir. We already have a sanction. We are just awaiting for the receipt.
No, because if I look at your production number for Andhra Cements, which you share,
No, you're
you.
mixing up. It is not for Andhra. It is
Uh-huh.
for Jeerabad, sir.
Oh, okay. For Jeerabad, where you're already. Okay, the Jeerabad, this is 30 crore annual per annum, which will be accruing, and nothing is
Yeah, we
additional
don't have
beyond
anything
this
in Andhra,
Jeerabad.
sir. We don't have anything in Andhra.
Understood. Okay. And this you will be retaining, matlab, quite a different type of. See, you're looking at if this number comes through 150 odd rupees incremental realization. So would you not be looking this as a using this to push more volumes
Sir, we have never used incentive
at
as
a
a
group
weapon
level?
for us to put more numbers, sir. We have always been margin conscious. We are market wise. So we don't compromise on the margin for incremental volume. That's a stated policy, Mr. Rajesh.
Great, sir. Thank you, sir. All the best. Thank you.
Thank you, Mr. Rajesh.
Thank you. As there are no further questions, we will now hand over the call to Mr. Reddy for his closing comments. Please, over to you, sir.
Yeah, thank you, Manish. We would like to once again, thank you for joining on the call. I hope you got all the answers you are looking for. Please feel free to connect with our team at Sagar or CDR should you need any further information. We will be more than happy to discuss them with you. Thank you again. Have a good day. Thank you.
Thank you. We will now close the call. Thank you, everyone.